Ni hao. Ohio. Loaded, loaded. Sorry, guys. Oh, just behind. I'm just pissing around the office today. All the time in the world. Of course, when that happens, I'm late. Hang on, I gotta pop out this chat. So, guten Morgen. Nice to see you. Hello, my name is Wayne McDonald. I'm a currency trader just like you. And I am here to share my, not quite 20 years of experience trading this thing we call Forex. What do you trade? Well, I like to trade euro dollar, euro yen, and euro Swissy. I like to trade pound dollar, pound yen, pound Swissy. I like to trade Aussie dollar, Aussie yen, Aussie Swissy, so on and so forth. Once in a while, some exotics. Once in a while, some kitty cat or kiwi. Once in a while, gold and oil and Bitcoin. All that kind of stuff. Man, I need a cigar. I think there's a hurricane or something going on because it's been raining in Georgia for 3 days, and that's really strange. When they say it rains in Atlanta, they mean at 3 o'clock it's going to rain like hell is falling out of the sky. And then when you wake up, it's beautiful and you're in heaven again. So it's weird to... I hear it's even raining in Miami. That's weird. Eric B says, so sometimes it does. Eric B and LL, well, hell. You know that one, Eric? So anyways, thank you for being here. Thank you for being part of the Forex.Today community of foreign exchange traders. There's about 14,000 of us staggered around the world. And we are patient, we are disciplined, we are focused, we are driven, we use technical analysis, we use fundamental analysis, and together as a community, we support ourselves psychologically and emotionally. Doesn't get any better than that. Let's go. Sam, I know that can't be true. It doesn't rain in Cape Town. There's no water in Cape Town. Isn't that true? Thank you, Vladdy. Vladdy. Vladdy likes to party. We don't cause trouble and we don't bother nobody cause... All right, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. So check this out. This is something I'm monkeying around with. Look up here. It says demo. I like that. Demo account hedge, whatever that means. Check it out though. It's my MT5. Kind of looks familiar, huh? What do you think so far? It's kind of neat, huh? Looks a lot like my MT4. What do you think? It's pretty though, huh? I want my MT5. Boom, 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 boom. What? Very nice. Look at this. Looks very similar. Yeah. So for you MT5 guys, I got something good coming your way, bro. It's going to be very nice. So I'm going to release this very soon. If you're an MT5 user or abuser, I got something good for you coming your way. Look at all, right? Isn't that pretty? So we got all my MT4 stuff working on MT5. A lot of things had to be custom made. It just, you know, it's the funniest things. Some things don't convert to MT5 from MT4. Don't know why. Okay. That's how, anyways. And I thought there was one other thing. I don't know where it was installed now, unfortunately. Huh. I installed something somewhere and I'm never going to find it, I guess. So anyways, we'll see. We'll use my MT5 today. It's because of those SQL people. SQL server. So anyways, there's one other thing in here somewhere. Or maybe I can just do it manually. Here's a euro dollar. Because I don't remember where I tested it. I think I have to go view navigator. Throw that down and click OK. I think that's going to be it. Okay. Oh, what? So I can't read that because I'm old. So anyways, let me update this because I had a template somewhere. Maybe I don't have the template anymore. 2 Z's and 3 Z's. Oh, you know what hang on, I gotta do it again. So anyways, I have to create a template for this, but isn't that nice? So what do we got going? I think the other thing we could do, let's kill the yellows. Wait. Alerts, play sound, high bound. I forget how to do it. Anyways, I don't need to mess with this. So anyways, you can get a calendar sitting on here and it updates and all that kind of stuff. So very interesting. So I'm working on that as well. So what do we got today? Well, today's Thursday, so we know we're looking at weekly jobless claims. Okay, and we're expecting what, a couple of mil, but also we're over 25 M now, aren't we? Isn't that where we are now? 25 million in continuing claims. So it'd be interesting to see the change, if anything. We got a little bit of tweeting going on between, it's funny, Trump and Twitter. We got some bad news out of China, or at least for Hong Kong. Yeah, is anyone in the room from Hong Kong? Is there anyone in Hong Kong right now that feels comfortable explaining, is this good, is this bad? Of course, it can't be good. But looks like Hong Kong's going to lose a lot of its freedoms. That's pretty scary. Need to watch it. I was interested in buying a skyscraper in Hong Kong. Now I'm like, whew, good thing I didn't. So we'll see what happens in Hong Kong. That's, so anyways. So anyways, euro dollar. Let's just back up here a little bit. Ooh, you know what? I have to put a drawing tool on this. Wait, do I even know how? I haven't tried this before, actually. There we go. I'm gonna need, no, don't have the available buttons. Where did drawing go? I guess in here. Can, fan. Rectangle, that's what I want. What do I not need? I don't need these. Oh, interesting. Draw object as background, parameters, what? Oh yeah, fill. That'd be interesting. That's what I want. We'll make this sort of a grayish. Or thistle. Or thistle's cool. Alright, good. There we go. That's perfect. Alright, so anyways, looks like a terrible place to buy. Not on C-Trader, sorry Marvin. Okay. So not a good place to buy, even if you're a bull. And I'll remind you why. What, right? Bulls don't buy high. They buy low. Right? So we've had all these step-ups over time. Okay? And now what? Now you want to get in? Wrong. Okay, wrong. When's the best time to trade? It doesn't matter what time frame you're on or what type of trading you're doing. Is at the open. So if you're looking at weeklies, right? If you're looking at weekly pivots, the best time to trade is in here. If you're looking at daily pivots, the best time is probably, this is London actually, so that was actually probably a down trade. And if you're doing a monthly, the best time to trade, and of course you can't quite see, but down here at the beginning of the month, okay? So you got sort of like a monthly position trade, right? Look at this, the beginning of the week. You got a weekly swing trade, you got a weekly swing trade, and then you got a daily day trade, and all this kind of stuff. There are plenty of opportunities to be a bull. Being a bull at the top is probably not a good idea, right? Probably not a good idea. So it's like too little, too late kind of thing. So we'll have to see what happens at 110 to see if you get rejected. Okay. And I think what a bear is going to want to do is a bear is going to want to see that we've reached sort of high enough. Okay. So Thursdays, which is today, is when you're supposed to be planning next week. Okay? So right now you should be thinking not about today, okay? Someone that just jumps in and buys this today is not on the clue train. Okay? So on Thursday, you're supposed to be thinking about Monday. Okay? Thursday is the new Monday. Because if you show up on Monday, you're like, hey boys, what's going on? What should we do? You've already lost all your money and you live under a bridge. Okay? Okay? So, a bear is probably already thinking to themselves that this would be pretty cool. And a bear's not really truly interested in selling here. They're interested in selling here. So whenever you get a reversal, and I'm not projecting a reversal, I'm projecting that this is a dumb time to show up and want to do something. Okay? So the first move down in a situation like this is not bears selling, it's bulls getting out. The first down is an out. The second down is an in. Okay? So bulls out, first wave down, then bears in, second wave down. So what they want, okay, what they would want in this situation is for bulls to get out. What kind of bull, what kind of bear would sell into a group of bulls? I don't know, it's a mob of bulls. It's scary, right? Okay. I could look at daily, that's fine. You don't like 1 hour, okay, so you look at daily. Okay. That's interesting, it popped up. All right, so this is helpful to you. Why is this helpful, Lee? And by the way, I don't mean it to come across like I'm challenging you. I'm truly asking you, why is this interesting? What do you see here that you couldn't see on the other one? Okay. Oh, you mean daily pivots or daily candles? Okay. So right? So what a bull needs, first of all, is for this 21, even the 5 really to catch up. Okay? But see, when it comes to next week, and I said you should be planning next week, okay? Bulls want to buy down here. Okay, so you're right? Oh, no, that's too fat. Gee whiz, I'm getting too complicated. So anyways, even a bull is going to need something like this. So if that's the truth, then you're going to need a day or two of down before you can get it up. Right? So what is this? It looks like maybe as low as 109.50. Okay. Right? You need a little bit of a pullback, right? So here's what's likely to happen in the shorter run. Okay. Just trying to get this just set up properly. Okay, there's going to be something like this, or there's going to be something more like this. So if you're a bull, you want to buy low. That's it. You got to remind yourself that. So you can identify different places where that might be. So you could say, well, there used to be something going on here, and then I got something going on in there. Let's make these a little fatter. Okay? And then, of course, the bottom of this is way down in here somewhere, huh? Where's the last sort of Alamo for a bull? Something like that, right? If it popped back into the range, right? Like let's put it this way. If bears did take it over, a bull would buy it down here, right? If bears don't take it over here, then a bull would buy this, right? And there's really a third thing that could happen. We could just get through this area, but it doesn't mean you should be a buyer. It just means you could go through there. And next week could kind of look like that. So I think those are the three likely scenarios for this pair if you're a bull. Oops. Okay. Yeah, why isn't there a watermark on this one? Should have been a watermark. That one you can't see. Interesting. All right. So now with all of that, you got to drop back into a smaller time frame. So that's just looking at the hourly because Lee asked for it, but it doesn't really. It's funny. I'm going to have to isolate that one. It doesn't really, like, we already had all that information. Right? Like, we're not going to watch it drop 500 pips all the way down, right? So that just gets us back to kind of where we are. Okay. Is this a good pattern to be buying? So we had this, then we have 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 this, and then we have this. Is that a good buying opportunity? It's not really the pattern. It actually shows a lot of indecision. Okay? So, right, bulls should have bought already at 110 as support. Okay, if it's going to maintain this move, seems like the London boys should have already driven it up. Right, you understand? Like, why didn't they do it? Okay, and there's a way to kind of answer all of that. Let's take a look, for example, okay, all these yen pairs are approaching tops. Okay, CAD yen already on it, for example. It's too bad. There's supposed to be a watermark on here. Okay. So in this case, what it's suggesting is that the vast majority of these moves have already taken place. Oh my God. Oh, am I officially graduating today? Oh, apparently I just graduated. All right, I've been busy. So anyways, at some point you have to recognize the plan has happened. The plan has been executed. Okay? There are real people, real money buying these things. The things that are supposed to occurred. Okay? Okay, look at when should you be trading? When should you be trading? So between now and let's say Sunday, on this pair, we should probably be buying down here. If it doesn't do that like it did last week or the week before, then it's meaningful information. If it goes high, I know how to respond to that next week. Okay? And if it goes low, I know how to respond to that the next week. So let's say today and Friday are big risk off days. So you got this, and you got this, and we're down here on Monday or Sunday, Friday close. Do you know what to do next week? We just printed truly the Fed printed $4 trillion more. So M1 has gone up by 4 trillion. Now the government also handed out money, and I'm not sure how they do that, if it's out of a budget or out of the treasury. I don't think it's out of the treasury. I think it's out of a budget. So that impacts GDP, but not money supply, right? So I could say, based on, let's say 8 weeks ago, there's 4 trillion more dollars globally than there used to be. So JP, I don't know how much more, right? Then what was the other thing you said, JP? Wayne, there's been a popular theory on the dollar due to its reserve status and the fact that so much debt and invoicing is denominated in it. Yeah, so there's going to be a shortage because of that? No. What did the Fed do 2 months ago when there was a shortage? 4 trillion more, done. You know what I mean? So not a problem. Well, then you need to stop whoever you're listening to or reading or whatever. Just stop. Just get rid of them. Okay? Okay? If you don't think Fox News is fair and balanced, stop watching Fox News. If you don't think CNN is fair and balanced, stop watching CNN. Right? So anyway, yeah, guys, if we're down here on Friday, here's what I'm doing next week. Done. Easy peasy, lemon squeezy. Okay? If this goes up in the future and opens high, then I know probably around Tuesday I'll be selling this. And then buying it back by next Friday. Well, KG, I don't typically trade silver, but I can do it for you. Okay. And Aussie dollar, okay. Okay. Why don't I do it? Maybe you didn't ask. $2.1, yeah. We knew it was going to be close to that, but thank you, Javier. Cool. Now, what you need is the continuing. Prince Philip says M25 feels better. I don't think so, but only because it's new to me. It seems slow to me, in fact. But other than that, it seems fine. Okay. So, in fact, let me open MT4. Well, KG, we're meeting up today in the group to do group work and to develop next week's trade plans. So I cleaned up the profiles and the layouts and stuff for oops, wrong one. For hang on, I got MT5 and MT4 going. Oh, that's the demo. Here's the live account. All right. So even for MT4 users, I've cleaned up everything. So the new installer will get you all put together lovely. So I created scan commodities, scan currency indices, scan exotics market, scan pivots for yen, scan pivots for dollar, and then individual currency scans. So scan Aussie versus everything, CAD versus everything, essentially making your own indice. But if you decide, for example, you want to sell Aussie today, you can pull this up to relative strength and put together a bunch of trade plans quickly. And then some yen pairs and dollar pairs. So looking at this, we have WTI, we have Nat Gas, we have Brent, we have gold, we have silver, and we have Bitcoin. Okay, so someone asked about silver. All right, there you go. What's my favorite EA? I don't have a favorite EA. I probably don't. I don't even really like EAs. Okay. So anyways, taking a look at silver, it seems pretty neutral. You had every opportunity to buy it. You know, down here, the clear buy zone is down here, 16.8, some change, right? So now, if you bought it, you'd be paying too much. In fact, there's supposed to be some sellers there. I look at this, you know, and it looks fairly neutral. So the true sell zone is much higher. So looking at all of this, you notice it's an inside week. So there's not anything really you should be doing with silver up here. Okay. You might be trying to roll it over on the M3 if you're a bear, but that's what, you know, that should have already happened on like Tuesday. So for trying again, I don't really like second tries. I mean, your stop should be up here. You should be short here, and you're just letting this play out if you're a bear. But right now, you know, you either bought it low already or you sold it high already, and everything else is neutral. So, you know, silver, why haven't I done silver lately? Well, it's just this. There's just nothing going on. Okay. There's a little exit here, and then there's a follow up here. So if you're a bear, you should already be on it. Okay. I don't think I'd be trading it this way. Oops. Let me try to get this properly. I don't think I'd be trading it that way, but you certainly could. But there's nothing in the market to indicate that that's sort of valuable. Okay. So we can measure this even tighter. So instead of 2 standard deviations, we can do 1 standard deviation over the last couple of weeks. Okay. And, you know, now you really got to like hunt for something to do. Okay. And it just kicked off 1 standard deviation from the mean. You see this? So if you're lucky, it comes down to here, but I'm not really interested in that. Okay. So if I were me, I would wait for a clear trend. And we haven't had a clear trend on that one in weeks. You hold physical silver. I know people that have, they're like ingots, but not bars. But so, anyways, that just looks like there's probably something better to do. Now you say up, 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 but not here. That's my point. Like, not here. Okay, this probably needs a lot more time. Okay, this needs probably, I think if you get up or down on this, you need probably a full week for something to happen there. Yeah. Long term, like let's look at long term. Okay, we can measure 2 standard deviations going back to 2016, and then we can measure 1 standard deviation going back to 2016. Okay, and let's click in a little bit to maybe a 4 hour. Okay, and what does this tell you? It's slightly overbought. Okay, so maybe we need to go out monthly and look at it that way. Okay, over time. So between now and January 2006, and 2 standard deviations going till then as well. Now what does this tell us? So based on the last couple of years, it's way over, oh no, it's just approaching overbought, just slightly over 1 standard deviation. Okay, and what do we see here? I know this gobbledygook makes it difficult. Okay, you see this? That's where we are now. And what we're looking at, let's do it this color. This is the average price going back, 14 years. Okay? So when someone says, oh, I think it's going to go up, 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 up. Well, I'd rather you say the average price is less than 19. So let's say 19. About 19. And we're at 17. So I'd rather you say, well, okay, this could go up another couple of bucks. Okay, but I don't know if that's worthy of up, 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 as you said, right? We're pretty close to fair market value. Okay? See, that's my point. Like, okay, this could go up a while, so here it is. All right, so here's price now. There it is. So it's, 20 bucks is fair market value based on the last 14 years. So let's say over the last 15 years, the average price was about 20 bucks. Okay. I don't care about, I see, again, you need to figure out who to listen to. There's doomsdayers, and then there's statistical analysis of the facts. Even accounting for that giant spike, over the last 15 years, you're looking at about 20 bucks. Okay. So, there you go. You can. And you're right, if it's the end of the world, you got problems with your silver. You got it. Right. That's right. But if it's the end of the world, firewood, toilet paper, tampons are all going to be worth significantly more because of demand and lack of supply. Yeah. Well, right, Blue Boy, and the idea that we're trying to do, or bullets, how about that one? Right? What we're trying to do, right, Blue Boy, is like we need to stay the ones that are focused and factual, and try not to spin anything. You want to just say, okay, we can have our opinions, which is important, and opinions are based on bias, and bias is based on analysis. So you've done all your work, and then we use technical analysis to confirm or deny our hypotheses. That's all it is. We have a hypothesis, that's your bias, and then we use scientific methodology to confirm or deny the hypotheses. And our testing methodology is based on technical analysis. So it is or is not. But I don't really do things like, oh, you know, silver's gonna go to 1,000 and Bitcoin's gonna go to 1,000,000, right? Like, and the US dollar's gonna crash as the end of the fiat currencies, blah, 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 blah. Like, all right, that might even be true, but probably not today. Okay? So we're the ones that are focused and factual. So I have a hypothesis. Like, for example, I'd like dollar to weaken. Okay? So this commodity is priced in dollars. 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 This one's priced in dollars. That one's priced in dollars. So even if the dollar weakens a little bit, these should all go up, irregardless of their demand. Now, if demand for these things go up, then they will also have their prices rise, not in terms of dollars, but in terms of, well, demand, right? It's the demand side of the equation. So there's two sides of the equation here. The demand side pushes up the value of the commodity, and the US dollar, if it's weak, pushes up price, not for demand of the commodity, but just in the weakness of the pricing, right? Okay? So both these are in play because the interesting thing is typically when demand increases for these commodities, the same thing is being in play for business around the world, and in particular, foreigners pulling their money out of the U.S. economy because they're going to do stuff at home with the money, and Americans, because of the setup of the economy, buys stuff, products and services from other countries. Okay? Has to do with income levels and all this kind of stuff. So we call that trade. So based on sort of the model here, when things are good, the US dollar will weaken because they send their dollars into the world outside of the US economy and then pull products and services into the US economy. So dollar weakens as the supply of dollars goes up globally. Cool. So that would be that same mechanism weakens the dollar and pushes up. So it's sort of a double whammy here. So I could have this hypothesis where I want the US dollar to weaken. That's it. That's it. And these are commodities. They're not even currencies. So sometimes, like, if I say pound dollar, you're like, well, gee, Wayne, are you buying the dollar or a pound? Or are you selling the US dollar? And if so, how much of which? And maybe you shouldn't be buying pound. So I can cut all that out and say, look, this is just trade. I am now trading sort of balance of trade data, right? I am now simply trading global demand for commodities as well as increase in trade, which weakens the US dollar. Either way, it's the same thing. So now I have one hypothesis. Demand for commodities goes up and the supply of US dollars globally goes up, weakening, and so all of this should go up if my one hypothesis is correct. So now the next thing is I need to use scientific methodology. And I have to say, well, is the trend currently up or is it currently down? What are the market conditions? And are those market conditions favorable? Well, it has been up for a while, so it's not the dumbest thing in the world based on recent past. That doesn't put me into a trade, but I have to analyze it. Are market conditions favorable? Okay. Okay. Are market conditions favorable? Much different scenario. Okay. But you have to analyze it and say, are those favorable for buying? And if I'm a buyer, at what price would I buy this? Okay. And that's where analysis comes in. Because as a buyer, you might say, well, you know, if Brent drops into here, right, I might be a buyer around 30. Okay, that's where analysis comes in. Okay, and gold. If demand for gold goes up, price will go up. If the US dollar weakens, this will go up. So that's, again, I'm trying to combine things. And then I use analysis to say, well, are these market conditions favorable? Is this bullish? Is this bearish? Is it likely to be bullish in the future? Is it likely to be bearish in the future? If it's likely to be bearish and I'm a bull, I don't really want to buy. Not here. Okay? And so that's all we're doing now is confirming or denying your hypotheses using scientific methodology. If you don't do that, you're probably inconsistent with your results. Okay? So if I were a buyer now, do I have permission to buy? Well, I like the fact that it kicked off support. That makes me feel good. So maybe, just maybe, I buy this around 17 in a situation like that. Or maybe I buy something more like this. Okay? And I start looking at scenarios in which I might consider buying. Remember, I'm the one in charge, so I make all the decisions. So I'm like, oh, okay, under those types of conditions, I might consider buying this. Okay? But Armit, all of this is the same. Remember, I only have one idea. I only have one hypothesis. I boiled it down to global trade balance. Okay? So if Americans are buying gold from South Africa, the demand for gold goes up and the price of gold goes up. But also, they're exchanging their US dollars for South African rand. So now South African rand goes up, but also the US dollar goes down. Which, either way, pushes this asset, because that's all it is. It's just another asset. Couldn't care less. It's just an asset. Then this asset goes up based on an increase of demand for gold and an increase of supply of US dollars globally. Okay? And now I could even take it further. Whoever's supplying the gold will have their asset appreciate. So what assets would that entail? Well, we could say Australia exports a lot of gold relative to GDP, right? South Africa exports a lot relative to GDP. CAD exports a lot, so on and so forth. The biggest producers are USA and China. Okay? But they consume their own, so it doesn't impact their currency. They eat their own gold. They eat their own dog food. Okay? So anyway, so I can follow the dollar. And all of this is based on an improved global trade. So a Trump tweet that says the United States are going to shut their borders ruins all of that. But I'll know because my price, my analysis will tell me that the hypothesis has been rejected. That's why we use technical analysis. Okay? And so it doesn't matter what the asset class is. Okay? If I want this to go up, and I've already stated my reasons why, are these market conditions favorable? If I were to buy, what price? Okay? So am I a little concerned about a rollover here? Well, not really, because all I'm looking for are proper reasons to buy. That's it. I only want to buy. Okay? Has it made a lower low yet? So let's analyze that. Let's pick the two lows. There's a low here and a low here, kind of the same thing, and then a low there. Okay? Has Bitcoin made a lower low in the last month? Has Bitcoin made a lower low in the last month? No. Okay? So there are two conditions. There's trending and there's range bound. If I'm a bull, where do I buy in a trend? If I'm a bull, where do I buy in a trend? Lower highs. Easy peasy. So I buy here. Okay. If the trend is sideways, if we're in a range and I'm a bull, where do I buy? And that's that. That's all there is to trading. So why make it so complicated? There's no other scenario. You understand? There is no other scenario. Why do we make it so complicated if there's only really two scenarios, right? Yeah, well, Samuel, yeah, so I mean, we never actually know why, right? Because not everyone's doing the same thing. But yeah, if they're going to cash, great. Okay? The thing is, you analyze this and say, if you want this gold to go up but it's going down, then don't buy it. So some of you guys are selling in uptrends instead of buying in uptrends. But David, you're planning Monday on a Thursday, so how could you be late? Okay? So I hope this is helpful, guys. Now, if you were a bear on this and you wanted to sell Bitcoin, wouldn't you feel better if it looked like this? Well, if you want to sell Bitcoin, then don't do it now. Wait for that. Because the first thing you have to test is, are market conditions favorable? Well, is it making lower lows and lower highs? No. Well, great. Then don't sell Bitcoin. Okay? You need to be trained to have discipline. It's either bullish or it's bearish. And if it's neither, it's sideways. But even then, you know what to do. Okay? It's either bullish or bearish. And you know exactly what to do in those situations. And if it's neither bullish or bearish, well, you know if you're bullish or bearish. So there's only one thing to do. There's only one thing to do. Okay? So stop making it so complicated. Okay? Okay? And remember, all of this is based on one idea, one fundamental idea: increase in global trade. So here's the thing, like Alex is like, hey, if equities drop, is this bullish for the dollar? It doesn't matter. You're already a bull or you're already a bear. You already know where you want to buy. You already want to sell. So if today it's risk off and tomorrow's risk on, you can't be all over the place. You had a trade plan yesterday or even the day before, even last week, you would have had a trade plan for now. And so if you're a bear, let's say you want to buy a dollar and you're on like pound dollar or euro dollar and you want to buy dollar, well, you're either at resistance right now and you're getting ready to sell, or you're not. And of course, if the dollar strengthens in this particular New York Open, well, you'll get a trading opportunity if you're at resistance. Right? This one's not loading properly. So sick of working on this. Better. Okay? So, let me put it this way. If this drops to 109, or let's say to 10, it's right now it's 109.77. Okay? But my plan next week, let's put it this way. Here's the plan for next week. Done. Who has a plan like that, a bull or a bear? So this chart doesn't make me bullish. If your charts make you bullish, you don't know what you are doing. Okay? My trading is the same as 20 years ago, especially in the sense that my charts never tell me what to do. You have to digest that. So 20 years ago, when I was teaching myself Forex, I spent probably close to 2 hours every day analyzing statistics. Statistics based on trading data that came out of my trading platform, because back then charts and trading platforms were two different things. So I'd have my trading platform open and I would look at overnight volatility data and I would plug it in and manually create an index for every individual currency. I would make an index for Aussie, I'd make an index for CAD, all the way through, and it would take me 2 hours a day I spent on Excel. And at the end of it, I said, I want to buy Aussie dollar. And I want to buy Kiwi dollar. Okay? Not based on opinion. Not based on fundamentals, because I didn't know anything about fundamentals back then. But I did analysis, statistical analysis of overnight trading volatility. And I would come up with my plan. I know I want to buy, and I know I want to buy these pairs. Then I would open up a chart. And I'd say, are the market conditions favorable for me buying Aussie dollar and Kiwi dollar? Okay, you see? But if you open this up and like, I guess I should be bullish. No, fail. Okay. Okay. Fail. Big fat fail. Does this make you bearish? like this? No, none of this makes you a bull or a bear. This is statistical analysis, and you're using different tools. What does this make you? What? Does this make you bullish or bearish? It doesn't make you anything. Okay? So here's probably what's going on with many people. They log in and they look at this amount of data and they buy. Okay? And then you're like, wait, it's not trending, dude. Okay, it might go up, it might not go up. That's the problem. Okay? It might go up, it might not go up. Okay? But buying at 2 standard deviations from the mean based on the past has been a pretty bad idea. Now, it could be an outlier and go higher. In fact, it might even. But when you log in and you look at this much data and you're like, dude, I'm a bull. That's your problem. Right there. Okay? That's your problem. What are you going to do on Monday when you look at a chart like this? You're like, Monday? I don't know what's going to happen in New York. Yeah, therein lies your problem. Can I build an account high from 150 bucks if I stay consistent with my trades? Yeah. Is there a difference between 150 bucks and 150 million bucks if you trade consistent? No. It's just math. Okay. Can moving averages be calculated if you use 1 minute candles instead of 1 hour candles? Oh yeah. Just math. You're just changing a variable. So think of it this way. Okay? If you produce 6% a month and you start with $150, okay, then at the end of the year, you'll have $300. And then in year 2, you'll start with $300, and at the end, you'll have $600. And that's in year 2. Then you'll start with 600, and it'll go to 1,200. Okay? And you'll say, well, Wayne, I got to get rich quicker. Dude, you can't cheat the math. Right? The market doesn't care that you're broke. It's irrelevant. It's not relevant information. Okay? But if you trade consistently and produce 6% a month and let it compound, okay, then there you go. Now, you might need 10 years to get this to be legitimate money, but that's not the market's problem. It's not my problem. It's not the person on the other side of your trade's problem. It's not your broker's problem. Right? It's irrelevant information. It's just your starting variable. But the fixed part is your, right? So that's 3 years. Then you start at 12. So this is 1 year, 2 year, 3 year. So 4 years, it goes to 2,400. Okay? Start with this 2,400. So in 5 years, right, you'll have 4,800, so on and so forth. Okay? But if you had started with 1,500 bucks, you'll have 48,000. Okay? Now, what will happen and will lead to your continued poverty is you're going to say, well, I'm going to go for 60% a month and speed up that way. Wrong, fail, dead. Okay? Right? See what I mean? So you can, but don't do it by jacking up your leverage. I can't imagine what lot size you'd be trading with for 150 bucks. I don't think there's a right answer. I think you should study Forex 12 hours a day and drive Uber for 12 hours a day and save a couple of $1,000 bucks. Okay? I would tell you to work multiple jobs and save $5,000. But people don't like that answer. Like, I only have 150 bucks. How do I get rich? Get 5 jobs. Save all your money. Right? And then practice and practice and practice and practice and practice and practice and get some real legitimate trading skills down. Solid. And once you're at that point, then start trading your hard-earned money very conservatively with discipline based on skill and analysis. Okay? And if you can't do that, you don't have what it takes. Okay? If you want to get rich quick, this is the wrong channel, my friend. Go find the one with the yellow Lamborghini. Okay? That's okay. But if you want to know how to run a business, I got you covered. Few thousand months, but see, all of that is irrelevant, right? So what is relevant in the math is how much you start with, okay, your consistent returns, and the amount of time. Okay, so if you're doing 6% a month, you didn't draw that right, but anyways, that's supposed to be 6% a month. Let's redo that. Okay, so if you do this for 6% a month, that's supposed to be a P and an M. Okay, and you do this for 13 years and 2 months. And you started with 5,000 bucks. Okay? With a simple Excel spreadsheet, you can figure that out exactly to the dollar how much you earned. And then you're like, well, what if I started with 4K? What if I started with 400? What if I started with 14,000? See, it doesn't matter. It's just going to spit out a different number at the end. It's just input and results. You understand? So I think the major problem is if you don't have any money, then you should get a job. Forex isn't going to make you money. You can't just get rich quick. You can't show up with $100 and want to turn it into $1 million. And of course, you want to do it quick as well. You're like, Wayne, you're asking me to work hard for 13 years to make a lot of money. Yeah, I am. Yep, you got it. It's a legitimate business. Right? A legitimate business. Get rich quick, not legitimate business. Okay? So you grow your trading account. And of course, once you get better, let's say after 5 years of consistent return. So what people care about is this. Okay? And your money's growing. And then someone says, oh, cool, that's really good. I'll give you 25,000. Keep going. So in year 6 or 7, you've been boosted up, but now your trading doesn't change, but the number at the end will change. And then on year 8, 4 more people put in 25K. So now you got another 100K. Plus this has been growing. Plus you got your own account. Right? And by year 13, you got a good little business going. Businesses don't take loans. Businesses make money. Okay? So listen to me, guys. You only got 150 bucks. What do? Drive for Uber every waking hour outside of what you're doing now. And what you should be doing now is Forex. Learning not just technical analysis and fundamental analysis, but patience and discipline and real skills under multiple market conditions. And it may take you a couple of years of 6 or 7 hours a day of legitimate hard work. I would even recommend you take college courses. You know what? I'm going to create the courses. But at some point, I would like to teach you finance and economics at a Harvard level. And that's what you should be doing most of your day, while at night when the markets are not moving, or on the weekends when the markets are closed, you're working a job. So maybe, now if you only have 150 bucks, you probably don't make a lot of money per hour, but maybe at the end of the year you saved, you made an extra zero in your account. But you're also 1 year smarter. How smart are you capable of getting in 1 year? Pretty decent. I don't know your brain power, right? But I bet you're pretty legitimately smarter when it comes to Forex. You can learn a lot of technical analysis in a year. You can learn a lot of fundamentals, right? So how do you grow, right? How do you increase your $150 trading account by 10x? Get a job. Oh, wait, I don't want to work. Well, that's going to be a challenge when you get to Forex, because let me tell you something. Forex is a lot of work. Yeah, you're right. Well, television, yeah. No, cut all that out. Like, gee whiz, right? Yeah. Right on, Dan. But I'm absolutely serious about it, too. Okay? And you know what? All this goes by. I mean, I remember it like yesterday telling FX boot campers and Forex.Today people that I just signed up to a 4-year program at Harvard. And it's going to require probably 40 to 60 hours a week of my time. And I got to be a husband, and I got to be a father, and I got to, make a living. And on top of all of that. And then Harvard says, you know what? You even have to move to campus and live here every summer. I'm like, holy crap. I'm 40 something. What are you talking about? I have to move to Cambridge and live there in the dorms every summer? Like, that's serious commitment and a whole bunch of money. And 60 hours a week, certainly 40 hours a week of my time on top of my existing life. Do you know what? I said, yeah. And I said, you know what? 4 years will go by. It'll be hard work. It'll suck for 4 years. And suddenly it'll be over. And I'll have survived it. And I'll have that. And you know what happened? I'm now wrapping it up. I'm done. That was 5 years ago that I got accepted in that program. Now I'm wrapping it up. I'm done. Today, apparently, I just got... I'm not even paying attention, right? So I'm wrapped up. I just got my degree. I just graduated. The ceremonies are tomorrow. Huh, great. Whatever. So when I ask you, look, it'll probably take 4 or 5 years of you working your ass off. Yeah, that's it. That's all I'm asking. That's easy. And I understand you probably have a spouse. You probably have children. You probably have another job. Cool. I know Forex is going to take less than 40 hours of your week. So all I'm asking you to do is like the same. And this is why I went there. This is why I did the program. I'd like to inspire you that you can do this. I'm inspiring my own children. I didn't need the degree, but now I got one. That's all. And I bet you it'll cost you less than a Lamborghini to get the same, right? So that's it. So you can do this. You can totally do this. You got this. And if you can't, because you need to get rich faster than that, and you're not capable of handling the amount of work that's required, then it ain't going to work out. I'm sorry. Okay? Maybe quit Forex and get a real estate license. But even that's going to take you 6 months. Oh, thank you, guys. Okay. So yeah, so cool. But here's the thing, I know you got it. If you have half a brain, okay? If you have a half a brain, you probably can't get a PhD. I guess it depends on the school. But if you have a half a brain, you can trade Forex. Okay? As you see, the hard part is simplifying things. Okay? So here's the thing. Right? What you have to have is a ridiculous, sickening work ethic. Okay? No, I'm not getting a PhD. No. That takes all the love out of it. All you need is a ridiculous, sickening work ethic. If you want to get rich, quit. Stop wasting your time. Go find some other YouTube channel, flip some Bitcoin, get rich quick. All you need is your cell phone and an MT4. Look at all the trades I made today on my MT4, on my cell phone. I got so rich so quick. Good. Go follow that dude. I got my yellow Lamborghini and all these chicks love me. Good, follow that dude. Yeah, rob a bank. And demo pose. Yeah, so anyways. So cool. So here's what I'm trying to do. So let's turn all of this positive. Sometimes you're going to feel like this is very complicated. Oh, sure. Absolutely. I've traded pretty much everything. Okay. All right. At times you're going to feel like this is very complicated. And where I want you to get at some point is become like Neo in the Matrix, where suddenly at one point in time, everything complicated becomes simple and easy. And you're just dodging bullets. You're like, oh, look at that bullet go by. And you can just see the matrix. You're like, and you're like, oh, this is easy now. And then you're just like, I can just stop the bullets in midair. I don't even have to dodge them anymore. Just like, stop. Okay? That's it. And how do you do that? Simplify, simplify, simplify. You have a hypothesis. I told you my hypothesis is US dollar weakness. That's it. That's all I got. That's it. That's my whole thing. There it is. I told you 2 weeks ago. I told you 3 weeks ago. I told you the Sunday before the Fed meeting minutes that this was going to be the day. I said all you had to do is read the Fed meeting minutes. And I even told you what to look for. And you would be done. That's it. I told you when. I told you what to do. I told you what to look for. And I know 90% of people here didn't do it. It's not my fault. But I told you what it would do. And you know I've been a dollar bear since that moment. And I told you what to do, when to do, what to look for, when it was happening. I told you the importance of it. Great. So that's all I got. That's the one thing. So since then, I've been looking for this to go up. Oh, look at that. Okay. I've been looking for this to go up. Oh, nice. Okay. And I think it was it about here? Okay. So that would mean this would fall. Okay, great, done, nice, fine. Okay. It's just one hypothesis. Okay. This one had a much more interesting story, much more interesting journey. But I want you to simplify things. I didn't do PhD level research. I read the Fed meeting minutes. That's it. You're teaching a group course? Peccary says, Wayne, why on Thursday though? Why not plan the next week over the weekend? Because you're usually already in your trade by then. For example, if I wanted to sell this for next week, if I was a bear, I'd sell now and I'm done. Most of the time, if you show up on Monday, you're already too late. You're just too late. Very often, the trade is on a Thursday. This is a setup for bears, and if you show up on Monday, it'll already be down here probably. So the best you can hope for now is like that on a Monday. But you'll see very often, Monday's too late. That's what I mean. Like, I'm never really interested in today. I'm already on tomorrow or the next day. Okay? Right? So when we're here, I'm thinking about this. And when we're here, I'm thinking about this. And when we're here, I'm thinking about this. Okay? Today is too slow. Okay? Today is too slow. You have to have the bias. So let me ask you, if you were a bear on this, for whatever reason, it doesn't matter. Are you going to miss that resistance? No. No. If you miss that resistance, you got other problems. Okay? You got basic problems. Okay? But if you have a basic level of knowledge and you're a bear, this is what you're doing. Great. And you would have tried it here, and you would have tried it earlier, back in there. But the thing is, you know what to do because you've already planned it all out. Now, the interesting thing is, now that it's a Thursday, and the question is, why do I plan next week on Thursdays? And why don't I just wait till next week or do it on the weekend or Friday after close? Well, because, for example, if I was a bear and I want this to fall next week, I would have already sold it today. And now I'm holding short. And my goal is not 20 pips. I want 200 pips, or I'm embarrassed. Okay? Now, do I know it's going to go down there? No. And do we have to get through this? Yes. And our bull's going to live down there? For sure. But all of that's irrelevant in the sense that I'm a bear and this is range bound. What did we already discuss today? There's only two scenarios. You sell high or you sell high. You sell here or you sell here. So that puts me here. Cool. And what's my plan for next week? My plan is that we will get a break and take this down further. But if I'm wrong, it's going to do this, knock me out of break even, and it's not a problem. No, I don't like trailing stops. I like to make my own decisions. Dan the Man says, so you basically swing trade. I scalp. I spot. I swing. I position. And I carry. That's all. Now, if I pull the trigger here, can you tell the difference between these trades? What's the difference? Right? what's the difference when I pull the trigger? You can't tell. They're all the same. You enter every single trade exactly the same. Okay? Your decision-making process is how far will this winner run? Most scalpers go out after 10 pips because they have no idea how to trade properly. Just the idea, like your customer, if you do the math, it makes no intelligence, no logical sense. Okay? So we discussed this in the trading group as the universal truth. Okay? Buy low, sell high. Is this a universal truth in trading? Do you know that to be self-evident? I'm sure someone will argue with me, but I'm not even interested in the conversation, so you have to say yes. And then what's the other one? Losses small. Winners big. Right? That's also a universal truth. So if you scalp for 10 pips, you are not fulfilling one of the universal truths of trading. Therefore, it's a really dumb idea. Makes no sense at all. Okay? Now, it makes no sense at all if it's the only thing you do, of course. Now, for me, when I enter a trade, you can't tell if I'm scalping or if I'm position trading. So you can't tell if I'm in it for 10 pips or 1,000 pips. Okay? I would count a 10 pip winner as a loss. In fact, a 10 pip winner would destroy my trading averages, if you will. So I would rather have a -3 than a +10. Okay. Okay. I wouldn't want a +10. I don't know. I mean, how valuable is that 10 pips to you? If 10 pips is valuable to you, you're probably significantly over leveraged. Dan the man, in a position trade, I'm literally going for 1,000 pips. Yeah. So how do you get stocks of cash? Well, I worked for 20 years. That's pretty good. That's a good way to make money. Am I thinking this is going to fall? I'm telling you, if you're a bear, based on the rules of engagement we've already discussed today, okay, you have permission to engage because you are looking at this from this point of view. That this price level is a range. And one of the two scenarios as a bear is if you recognize the market like this, or if you recognize the market like this, then you know your rules of engagement. You either sell high here, but that's not the market conditions we're in, or you sell high up in here. And you're like, okay, well, I'm a bear and I see this moving sideways, so if I wanted to, I'd sell high. Yeah. Or you don't sell high, you're the boss. And you're like, I'd rather wait for a breakout. Cool. Well, it's going to require patience and discipline to pull that off. Cool. Now, what I'm saying is you can take it a step further. I'm like, why would you be so focused about today? So if you sold here, great. So let's do this. So if you sold up in here, great. You followed one of the two rules of engagement. Like, it's not that complicated. So if you did that, you sold the triple top. What I'm saying is you took all that risk to make what, 25, 50 pips? When you have like 200 sitting on the table right now, if you get this right. And you also know where it's going to bounce. You already know where you're going to be wrong if you're wrong. So if you sold here, do you think there's a chance it's going to bounce back up here? Like it did here, like it did here, like it did here, like, right? Look at all this, guys. So what's the likelihood we get some up around, well, closer to 107.45? Okay. Well, that's pretty high. That's a pretty good probability. Okay. So you could sell here and try to make 25 pips. But I'd rather just jam my stop. Why? Well, you have to understand the difference between me and a scalper is I've done hardcore analysis of global macroeconomics, and I've made a decision based on my interpretation of the data. I've decided to be smart money. So if that was my opinion, that we're going into a trade war and we're just one tweet away from yen strength, then I'm saying, you know what? My trade is worth more. My analysis is worth more. My trade plans are worth more than 25 pips. So I'd rather lose 3 pips than make 25 because I'm worth 200. And here's the interesting thing. When you get this down and you get confirmation you're correct, now this is where your other trades come in. So this might start as a swing trade, but do you understand that this is a day trade, this is a day trade, this is a day trade, and inside those day trades, there are smaller trades, intraday trades, market open trades, right? So you got so London comes down, you got another one in New York, and then there's an Asia fade, and then London again, and then New York, and then an Asia fade. And so at the end of the week, so let's say now you're down into here, and you're like, well, I'm not so sure. So this one's up 200 pips. This one's up 175. This one's up 150, okay? This is, I don't know if you would have taken a second one in that scenario. And this is up 100, and this is up 100, and this one's up 150. So you walk away and you got 1,000 pips in your pocket, and you had one trading idea, but it was valuable. Versus, I wonder what's going to happen today. What's going on, boys? Are we buying and selling? Oh, look at that London breakout. I guess I have to be a bull now. Think I'll enter my trade 2.5 hours after the opens, pick up 25 pips and pray. Okay? Right? Oh, thank you, Javier. German wants to see my trades. Guess this information's not good enough. So I'm striking a negative chord with German, or Germain, whatever it is. Lozada. So I'm not connecting with you psychologically or emotionally, German. You're fighting me. So none of this, what I just said, is helpful. But you have to, so if I showed you, no, it's not rude, but it's interesting because it's just fighting. So like, here's the thing, even if I did, you're not gonna do, I mean, you're still gonna be in the same place. Okay? So it's not necessarily rude, but like, so if you knew I could make 1,000 pip trade, now you would change everything you're doing? No, but let me, like, seriously, so German or Germain, if you saw me make 1,000 pip trade, you would drop everything that you're doing and you would then just, you would listen to every single word and take my advice, or as much as you possibly can? Would it really make a difference? Thank you, Daryl. German. Huh. It's too bad. Well, that's the thing, though. Like, oh, there he is. A different one. He's just, yeah, no. So, yeah, different. It's a different German. No, it's even gone, I think. But the point is, there's dozens of people here in this room right now that have seen me do it. So, I mean, so now if 30 or 40 people can confirm they've seen me do it multiple times, then there you go. And then I would have just given that person the strength and confidence they need to actually listen and learn. No, there he is. Maybe yes. Okay, good. So there is likely dozens of people here that have seen me do it. Many, many, many times. So now you can trust in them. Yeah, and many people here can confirm their first 1,000 pip trade. Right? No, but my pocket is irrelevant. Right? All of that is, again, irrelevant. Okay? What you start with determines what you end with over the course of time. It might be Germain. I don't know if it's Germain or German, but whatever. Cool. Yeah, yeah. No, I don't see it as a complaint. It's just sort of new. Like, I mean, we all have these roadblocks for learning, and it's really interesting. Sort of, we suffer from our human condition. That's what, you know, why is it that suffering, well, suffering, it seems to be a requirement for us to learn. And I don't really understand why, but again, I don't have to understand why. But we have to go through these psychological and emotional barriers, not just intellectual barriers, but we have to have these breakthroughs. We have to have these aha moments. We have to have, I think every trader I've ever talked to, and I've talked to many thousands, we've all had this point where we're staring into the abyss, where we're like emotionally broken. Right? Oh, okay. Sorry. Like, I don't know. Sorry. Yeah. Thank you, Russell. Airman or Herman? Herman? Yeah. All right. Right. So there, it's interesting. But I've been there too many times. And it, so when someone is at that level where I just lay out, things like the universal truths and how to buy in a trend and how to buy in a range and all these things and how I make a decision, and then you're like, all of that's crap until, right? Like, do I ask my Harvard professors how much money they make? No, I go there to learn. Okay? So, anyways, whatever. Like, no harm, no foul. Okay? So, what I'm trying to tell you and show you, and what I do every day, is I've been telling you for a very long time that I want to sell the yen and I want to sell the dollar. Now, you could totally disagree with me and still make money. But I know what I'm going to do before I do it, and you should know what you're going to do before you do it. Right? So this has been up and up and up, but I told you that's what I wanted. Do you guys remember the trade plan on this? It's not complicated. We drew that out days before it happened, and I did it here too. Okay? And here's the one before it. That one's not perfect. Sorry. But it ended up being perfect on that one. Great. Okay? You guys remember all this? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down. We've done it all before. They're not on the charts because I just cleaned up all my charts for the MetaTrader launch coming up. But, like, right? So let's go out to here. If you were a bull, was this tradable? Yeah. Now, up in here, this is very dangerous. Okay? This is a very dangerous one. And you should see that. Okay? But you should also see... I got to get this out of the way. Okay? Now, let me ask you something. If you were only a bull and the only thing you could do was buy this, would you get these trades? Yeah. And the same thing is if you were a bear, if you could only sell this trade, would you have caught this one? Oh, yeah. And would you have tried selling here? Yeah. And would have knocked you out? Yeah. Because these are bearish conditions, right? But I'm a bull, so I don't look at any of those things. I use them for managing my stops. But, you know, I'm going to get moves like this, okay? And I'm definitely going to get moves like this. And I'm definitely going to get moves like this. So on and so forth, over and over and over again. Because I'm only looking to buy. I'm only buying dips. I can see this as a trend. So I know to buy lower highs. I know how to use price action. There's no debate. There's no anguish. But when things are over, they're over. Like this might have knocked you out of this trade and you're probably done and you'll pick this up, right? So as you get new knowledge, I would suggest writing things down, simplifying, and challenging yourself to make it easier, right? So, for example, let's find a different one. How's the beast looking? Okay. There are different points of view of this pair. Okay? The bearish point of view, that's clearly a sell. This is clearly a chance. This is, right? There's lots of moves here. And we also knew right around this 130.34, if you were a bear, you should stop trading. That's it. When I say discipline, that takes discipline. You just made a boatload of money? Great, stop doing it. I can't stop! I can't! I need just one more trade. Just one more trade. I need one more trade. Right? Crack addict. Just one more. Just one more. Then I'm good. You're patient or you're disciplined. Okay? The thing is, that whole time I was a bull. Okay? I still don't know if I'm right, but do I get trade setups? So I don't know if I'm right, but let me explain it this way. If I'm right, then. See, everything's an if-then. If it makes a higher high, I'm going to buy a higher low. If it makes a higher high, I'm going to buy a higher low. If it makes a higher high, that's it. That's it. If it makes a higher high, then I'm buying a higher low. I also know technical analysis, so I know my worry warts live up here because I know a bear is going to try it there. Okay, that's cool. Bring it on, brother. If you knock me out, I'll stop trading. That's it. Do what you got to do, bro. You're a bear. You're going to take this down. Great. You'll knock me out, and I'll wait. Dave, ideally, yes. You're stacking them, packing them. But that's a position trade. So I don't know what your trade plan is. Right? For that, right? If you're doing that, Dave, you have to know, are you in it for a day? Are you in it for a week? Are you in it for a month? So right? And that'll change your behavior. So let me give you a little secret. One of the things we're discussing in the live trading group today is what we're going to do in the next couple of days. And we're looking for hundreds and hundreds and hundreds of pips. Hundreds and hundreds and hundreds and hundreds of pips. That's what we're planning today. Because we're not interested in a day trade. That's not what we're meeting for today. We're not even looking at a weekly trade. We do that all the time. It's chump change. We're going to be in a trade for weeks. Right up until and possibly through the Fed meeting, June 21st. Okay? That's what we're going to do today. So if you were planning that trade that you're going to be in for weeks and weeks, then your behavior is going to be different here. So like, do you just keep moving your stop? That's one way of doing it for sure, but not if you're in it for a day trade. Okay? Right? How many people here got their first perfectly planned, totally legitimate, strategized, and planned to a T, their first 1,000 pip trade hanging with me? How many people like put it all together logically, probably even put it on paper, could explain why it was going to do it and all that kind of stuff, and then actually rolled through and let the sucker run and pick up like hundreds and hundreds and hundreds of pips. Planned, written down, pretty little pictures. Yeah, hundreds. Right? Yeah. But see, you have to have forethought. Okay? If you're going to make 500 to 1,000 pips, it's not luck anymore. Especially if you hold up a piece of paper and you're like, Wayne, this is what I'm going to do and why. Okay? Conrad said, not there yet, but did 3 different 250 pips trades. Right on. Don't be embarrassed. Right. The thing is, that's where you have to be. You need to be able to write it down on a piece of paper and tell me what you're going to do and why you're going to do it. And imagine when you go to speak with a potential investor, you have to say, this is what I believe in, this is my point of view, this is my strategy, and this is the reason why, the 3 reasons why. Think about it, you should have a bullet point presentation. You are bullish global macroeconomics, risk on. And you can say reason 1, reason 2, reason 3, and then also if you're going to write a proper paper, if you're going to do proper research, right? Once you give your 3 reasons, you should always have 1 or 2 challenges to your own thesis. And you can say, but this would be negatively impact if Trump starts a trade war. This will be negatively impact if we get hit by another wave of viruses around the world. Okay? So you even know not only the strengths of your plan, but the weakness of your plan. And when you can do that, you got a chance. Because now you simply use your technical analysis. And remember, if it's complicated, you're making it complicated. You need to simplify it. But if you can write that plan down, what your strategy is, 3 reasons why, and maybe 2 challenges to your own thesis, now you have a plan, a bias, and a strategy. Now, tactics are easy. So if you're going to buy all the end pairs, then all you have to do is wake up in the morning. You're like, is this a good buy? Is this a trend? Is it trending up or is it trending sideways? Oh, it's trending down. Oh, don't do anything today. You need to simplify it. Why do you make it so complicated? You should get angry at yourself. Why do you make it so complicated? We all know the reason why. Your 3rd grade teacher caught you talking at the back of the room and made you come to the front of the room in front of the chalkboard and explain to the class everything that you weren't listening to. And she embarrassed you. So now you've been trained like a puppy by your mother and your school teachers, right? To make things complicated, because then people say you're smart and they fill you with love. Oh, you're so smart. What you need is simplification. Don't make it complicated. No one's going to love you for how complicated your trade plans are. Are you a buyer or seller? I don't know. I have to wait to see what the angle of this Gartley pattern is. That's silly. Are you a buyer or a seller? I'm a buyer. Why? Right. And now if you know if you're a buyer, you know the conditions are either favorable. Okay? So if you go to a car auction and you got $8,000 in your pocket, you're going to try to get the nicest car at the auction. You know what a deal is because you looked at all the cars. Some cars are not worth $8,000. Some cars are worth more than $8,000. But if you don't know the value of the car, then you don't really know. If you can't, you're like, I don't know anything about cars. I can't even pick out a car. Well, find a car you like. I don't know which one's good. Well, which one would you like to drive every day? I really don't know. I don't drive cars every day. Some people are like that. I just can't make a decision. I don't know anything. Well, then that's going to be a very big challenge. But if you know, you're like, that is a beautiful car. I'd pay $8,000 for that. And let's say the car starts bidding and goes up to $13,000. Do you buy it? No. Why? It's too much. Okay? Yeah, I can't drive. I don't want to drive. It just big. But there are people like that. There's no doubt. Okay? But all of a sudden you're like, dude, bidding is stalled at $6,000. I'd pay $6,000 for that car. Okay? Anyways. So if you walk in and you know if you want to buy, you want to buy. Great. So why do I do it on Thursdays? Because I'm already thinking next week. Okay? Many of these pairs I'm already done for the week. Okay? Or we're going to be done for the week sometime soon. Okay? But check this out, just in case you don't know. That's one of the 2 counter trend trades I teach. Pretty awesome. It flipped there. Okay. So anyways, I think I've gone too long and I apologize. I just looked down. It looks like it's been 2 hours. So I apologize for that. But let's simplify. Let's simplify. If you can't pick a bias, flip a coin, and that's what you're going to be for the next, till the end of the year. I really don't care. Okay? If you can't pick a bias, if I say, make a prediction for the Aussie dollar between now and the end of the year, and you're like, I can't do that. I'm like, oh, just go to the RBA website, the Reserve Bank of Australia website, and read some of their reports and what do they think and how's their balance of trade data and stuff. And you're like, I can't do that. I don't know how to do it. I don't want to do it. I don't know. Then flip a coin. Flip a coin. And from that moment on till December 31st, that's what you're going to be. So if you say heads, bull, tail, bear, you flip a coin, done. You just made a decision. And from that moment on, you know what you're going to do. If you're a bear on the Aussie dollar, you open your charts, you're like, is this good conditions for selling? No. Then you're done. What about next week? Are these good conditions? No. What about next month? Are these good conditions? Better. Oh, okay, I should pay attention. Is it trending down or trending sideways? Oh, it's trending sideways. Oh, well, do you sell lower or do you sell high? Oh, I sell high. Cool. And then it breaks out below that range. Now it's made a lower low. What are you going to do? I think I'll sell the lower high. Then it makes a lower low. What are you going to do? I think I'll sell the lower high. You have to be comfortable waiting 8 weeks maybe, or 8 days, or even 8 hours without a trade. That's cool, dude. Because at the end of the year, you're just going to have that pile of gold. That money. And you're like, you only traded when market conditions were favorable for you turning a profit. How about that? Do you have the patience and the discipline to only trade when market conditions are favorable for you making a profit. 95% don't have what it takes. So if you got that half a brain, maybe even more, and you have a ridiculous, sickening work ethic, you can be a huge, huge, huge success trading Forex. It might take you 5 years. It might take you 10 years. It might take you 25 years. So hurry up, get going. There's no time to waste. Peace on earth. May the pips be with you. May your profits be above average. And team, I'll see you tonight. Remember, we got group work tonight. So make sure you understand if you're a bull or a bear and what you do about it. I want a solid trade plan for the month of June from you guys. And then we're going to go into debating because you know I'm a master debater. Have a wonderful day, everybody. Thanks for being in my life. Visit tradersway.com, open a demo account as your way of thanking them. I'll send out an email at 4. We'll do it at 4 just for the sake of consistency, okay? I'll send out an email and I'll remind people. All right, take care, guys. Like and comment, huh? Likey? Likes and comments.